Let's begin with more record highs for the macro markets, and we love being out west for many reasons. In one part, though, because we get to speak in person to one of our favorite market gurus. That is Mike Khouw, chief strategist, OpenInterest.pro, CNBC contributor, just general all-around great guy. Mike, it's good to see you on set, or it's good to be here. I can't decide which is which.
Oh, this is great. You didn't stop by, though, on your way to Napa.
Oh, I had a blimp chasing me, apparently. This is a big deal, okay? Ray Dalio earlier today sort of making more comments that maybe there's a bubble. Maybe AI is creating a bubble. Is the macro stock market in a bubble, yes or no?
No, I don't think it is. I mean, look, there's a big, we were talking about it right before we came on. I think there's a big difference between something being expensive and something being valuable. We have a lot of companies that have gotten very valuable, but there's a good reason for it. I mean, we're seeing, margins and profit generation that we have not experienced before. I lived through the tech bubble. We saw a lot of very rich valuations then. We're nowhere close to that now. Consider Cisco at its peak was trading more than 200 times earnings. Now we've got names like NVIDIA that are trading at less than 30 times earnings on 30% year-on-year growth. And that's down, by the way, from where it was before. So we're not seeing any slowdown on the CapEx side. In fact, I think some of the Amazon layoffs probably relate to that, too.
We'll get to that in a second. Fair enough. But the market whataboutism, right? Because a lot of comparisons to Cisco in 99. It was, at that time, the most valuable company in the world. I get it. Is it fair to compare that to this? Can they both be independently bubbles, even if you relate them to each other? I think that's what market bears might argue.
Well, I think what makes a bubble, there's two things. One is completely irrational valuations. And I don't think we're necessarily at the irrational valuation part. That's the first aspect. The second thing is, are we dealing with something that is just a blip on the screen? In other words, is this a short-term event? What would be an example of something like that? Pfizer and Moderna with vaccines, obviously the bloom is off that rose now. What happened with Zoom? I happen to like Zoom as it happens. I think the thing is cheap. It's got a lot of cash on the balance sheet. But that was another story where you had a
pandemic bubble related. Well, the Pelotons, the world, everybody rushing irrationally into things because we did things for a short period of time.
Idiosyncratic events that get people overly enthusiastic about a theme. Are we overly enthusiastic about AI? I don't think the answer is yes.
Why not?
Well, first of all, I think that it is 100% going to be a part of the new economy. And, we're not, again, valuing these businesses, because people would say, and you probably will say, well, that's what everyone said about Cisco, the Internet of Things, and that was going to be the new thing. And, of course, Internet obviously did end up changing.
I was actually going to argue about radios and railroads, right? 1880s railroads, early 1900s radio. Everybody knows those things are going to be part of the economy forever. But there was a flurry, there was a mania around those things.
Yeah, there's a little bit of a difference there. I mean, first of all, the railroads were there was some government investment there that basically said you can help out. And then when they actually took the turn, there was a massive infrastructure spend on the highway system, right, which took a little bit away. If we had not done that, that probably would have changed things a little bit as well. So, the way I look at the railroads and things like that relative to what we have right now is, you could have had kind of a utility growth eventually. You sort of build the whole thing out, and then you have a utility.
Yeah.
And I think we are going to have that, and we do have businesses that are like that now.
We're going to hear from Jensen Huang in a few minutes. Is NVIDIA overvalued?
No.
Is Amazon overvalued?
Definitely not.
Is Apple overvalued?
That one I'm a little bit struggling with. We're trading at 32, 33 times. Now, in their defense, there's a couple of things that are working. Number one, it does look like the iPhone 17 is creating more of the refresh cycle that everybody hoped for with previous iterations. That's the first thing. The second thing is we are seeing better top-line growth. I mean, we're looking at 6-7%. To me, when I look at a company and I say, okay, am I interested in this company relative to the S&P? It's got to grow the top line faster than the S&P does, which is about 6 to 7% on average. Mm-hmm. And it's got to grow adjusted EPS, again, faster than the S&P does. Otherwise, why wouldn't I just own the S&P, which is well-diversified, and I don't have to pick? And Apple actually has admittedly kind of caught up on that metric, but is still trading a couple turns richer, and I'm not sure that's as justified.